What's going on, everybody? I want to welcome you to the daily plan. It is Tuesday, June 6th, and we'll be looking ahead to the 7th. And of course, we're looking at the S&P Spider ETF here. Just wanted to say, of course, that this video is for educational and entertainment purposes only. And if you're enjoying the content, the updates that I am providing about the market, don't forget to give us a follow, smash that like button, and turn on those notifications. That way you are alerted every time we post new updates about the market. All right, so with that being said, here we're looking at the daily chart, and we still have a bit of this volume divergence that we're watching. Not too many developments, really, big picture. We're still in this consolidation cycle that we were talking about being likely, and we are starting to see that type of flag pattern that we thought could start to form here. So want to watch to see how this works itself out over the next 1 or 2 days, possibly into the end of the week. But we do have some major data next week, I believe, with FOMC or maybe CPI. I'm going to have to double check. But there is a chance we just chop around until those dates. So I will keep you updated when I look a little bit more in depth. I didn't check the calendar yet, but I've saw some people talking about it on Twitter. So it very well may be a case where we stay in this range, and that would be the catalyst to break us out of it. But that being said, we're still holding all the major bullish structures. Still want to watch out, even though this is starting to form a flag, still want to watch out for possible distribution. And then we end up just rolling back over, maybe actually to come in and retest this broader megaphone, that pattern that we have broke out of and we have been watching. But all eyes right here on that key 430 level. We really haven't been able to get over that yet, and if we do, I would expect prices to come a bit higher into that 432.26 and then 435 if we in fact do get the breakout. So I'll be watching that as well to see what happens with this flag. But not too much. Like I said, big picture has changed structurally, so we don't really have to go over too much as far as that is concerned. All right, so let's go a little bit more. We can take a look at the fibs very quickly. Again, not too much has changed. We're still just hanging out right here, that 428.70 area. We tried to break above, couldn't break above, and now we're just hanging out. So I'm still watching that area. Bigger picture, the 422.86, we were talking about that last time, is a key area. So we'll see if we start to break under. We'll look for more selling pressure to come in, but bigger picture, and we'll go over the intraday ranges here in a moment. But bigger picture, as long as that holds, we still should have a chance at higher prices. All right, so let's get into the range right now, and what we're looking for into tomorrow. So we're still in this consolidation cycle here, as I mentioned before. And the one good thing that I can say, now that we've had 2 days of trading into the week, that the range pretty much has been established, right? We've got the swing high here and the swing low. I'm going to still keep this 425.82 area on watch. For me, is the absolute lowest that bulls would want to see prices before we potentially start to retrace lower, but that remains to be seen at the moment. So really, anytime we're coming into these lower ranges and we still hold that, the bulls are still in control, and I'll be looking for buys in these areas if we do in fact come down back into them. You can see here we did in the morning, and we had basically a double bottom right near this 426.40 that saw some nice buy reactions a few times. So But at one point, the bottom of the range or the top of the range isn't going to hold. So, obviously, as we get to the top of it, that can lend itself to shorts. But but at one point, it's going to break through, and to which side we don't know. But that's something certainly that we're going to have to keep in mind. The more times, especially, that they get tested and get weaker subsequently. So it's pretty simple here. The 425.80 basically break under, come back, retest, and we'll be looking for more of the short trades, and breaking over and then retesting would be more of a long trade type of scenario, right? And I have 429, 65 here, 67, but really you might want to wait for 420 to really, 430 to confirm before making that trade, since that whole psychological number is right there. It's something to watch out for. But really also, you can, and I can't do it. Let's see how it looks on this chart. You can also, if you want to run some tighter fibs, you can also run it from here, from this swing, and we're kind of going sideways, so I'm not really sure what the correct, if we're going to do it on an uptrend or a downtrend. I think let's just do it on an uptrend here. Well, actually, we'll go from the highest point. Actually, I should have kept it the way I wanted it, the way it was before. But let me expand this. And I'm gonna take the whole range. Even though it's not the swing low, that might not be the most correct thing, but that's what I'm gonna do. Whoops. So we can get an idea of this right here. So the 618 here, this 428 area, gonna definitely have to hold that. I would say that's gonna be important. But the 50 here at 427.70, we'll call it, we can make that, it's our 50% retracement within this range. So you can basically also use this as kind of your, and I've talked about this in other videos, your bull bear pivot for the range, right? We start getting under the 50%, then we'll be looking for the 32, the 28, the 38 and 23, and then possibly down into closer to this 425.80 area. And if we're above the 50% retracement, then we'll be looking for 428 to hold here, 428.80, and so on and so forth. But that 50% line, you could have that as the line in the sand for making some decisions. You could also try to directly short it or directly buy it, depending on what direction we're moving in the trend. So that's also something to consider. But since we're just still in this basic chop range, really not too much to go over, but it is nice to have the range established, at least for now, so that way we can have a broader picture of what's going on in the markets, and then being able to trade around this accordingly. And from 425 to this is $5, so it's totally tradable. But I am still being defensive, trading less, taking 1-2 trades a day with smaller size. That way I just don't mess myself up. And just looking at the hourly candles here, look at this, it was down, up, up again, down. You can see this fake break, choppy, more trickier price action that can be harder to navigate, certainly more so than when we were rallying up last Thursday and Friday, right? This is just go long and hold, right? So but now we're in this different condition, so we trade a little bit differently. Either way, let's see what happens tomorrow. I'll be taking it light still, as I was saying before, but I hope this helps, and we'll make this video short and sweet, and that's all we got. I guess before actually, the only other thing I want to say before we end, VIX, it's just going lower and lower and lower, and we were talking about this volatility compression here as it just drops now to levels we haven't seen in quite a while. Let's see, this is a 3-year low. Let's go back even further. I mean, look at this all the way down here. So we'll have to see what happens, but the next area really to look at on VIX will probably be down here at this kind of major support. As you can see, multiple reactions as we've gotten down into the 11s. So I'll definitely be watching this zone as we progress on this downward momentum. It seems, overall though, that VIX is a little bit disconnected from the market at the moment, but that's fine. I still keep an eye on it and watch what it's doing, as it can certainly give us clues about directions in the market. But you can see, at least on the weekly here, came up and basically made a bit of a bear flag, and then boom, came back down. So we certainly are getting a bit in the dumps on the Momo though. So that is definitely something I am watching out for. But let's see if they keep selling it. We're definitely coming into some interesting areas though, and that we certainly want to watch out for. A lot of wicks here on the weekly chart, but as we're in these areas, like I was saying earlier, it's not really a time, in my opinion, to be taking new swing positions long, as the risk to reward just is not there at the moment. So, and it, nothing really at this time is also telling me to swing short yet. So, as those things develop, I'll definitely, bring them to everybody's attention. We have obviously been talking about being extended from value for a while, but just waiting for a few other things to potentially line up before I consider maybe taking a shot at a swing trade to the short side. But, like I said, we're not quite there yet. So trade smart, trade safe, be careful, and I will see you tomorrow. Take care.